All right, fam, happy Monday. We do have some kind of greenness in the market. It's great for a Monday, but it's a little bit scary what has been going on in the weekend. Sunday, if you've been watching the charts, there was a liquidation to the downside and a liquidation to the upside, and then nobody knows where the market is actually going to head now. I said in the community, I'm chilling. Guys, I'm chilling. All this is noise. You got to keep your target. You got to have a plan and plan the trade and trade the plan, and this is exactly what we're doing. I explained to you on Friday on what my plan is, and my plan is that we got to have a final push a little bit into this daily equilibrium, the 50%, and potentially reject from there. That is what is most likely going to happen. Now, I'm going to talk about this. I'm going to talk about what I see in the market, how I'm navigating. If you don't know who I am, my name is 𝗏𝗏, and I set out to 100x my wealth in the next 10 years. So if you follow that journey along, everything is documented in 5 to 10 minute daily updates. Very short, very concise, and helps you navigate the market as well. Nothing is financial advice. Always do your own research. Investing and trading cryptocurrencies is risky, and I'm not a financial advisor. This is for entertainment purposes only. Let's get going. Number one, very important. So the market is a little bit undecided here, and nobody really knows what is going to happen. Are we going to pump? Are we going to dump? Very important. Couple of things to talk about. This week is crucial for the market, okay? We do have FOMC, the last FOMC for a very, very tiring year, and it is not only FOMC, but also dot plot on FOMC, meaning the Fed committee members will project, or they will have to place dots on the interest rate charts where they see interest rate heading in the coming year. So they have to dot for 2027, I think 3 years and 5 years. So or every year, yeah, 2027, 2027, 2028, and 2026. They have to plan all this. So it's going to be very, very big on Wednesday. I'm going to be here streaming it with you. But ultimately, not just that. We got JOLTS opening. We do have the 30-bond auction, which is probably no one is going to show up, I think, which is going to be horrible. We've got jobless claims data coming, OPEC meetings. So a lot of things. Again, very volatile week ahead. Now, there is no surprise when it comes to the rate cuts. There is going to be a rate cut. There was a lot of noise whether it's going to happen or not happen. There is an 87% probability now. If it doesn't happen, it's horrible. As I explained on the show last week, Jerome Powell has to continue cutting. So I don't think it's an if or when. And I said that the unemployment claims going down, meaning the economy is strong. They are cutting into a strong economy with high inflation, which is catastrophic. Tom Lee thinks otherwise. He basically says the Fed would be cutting for the right reasons, which is they look at the next 12 months. The tariff inflation impacts are fading, but there is risk on the job market. So he's acknowledging a little bit on the job market, but he's saying that the Fed is going to cut. Everything is fine. Well, that's not what I think. And also Tom Lee said that Bitcoin is going to 150,000 by the end of this year and 7,000 ETH by the end of December. We'll see if that turns out to be true. But one thing is certain, there is 70% probability for a rate cut. This is actually Rain, one of our partners here on the channel. You can launch your own prediction market as well, and you can see it's very much like Polar Market, a competitor, an upcoming, an underdog for a Polar Market. You can go and check them out in the description. Let's jump in here. This is very, 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 very relevant, okay? So here's what I explained. This is basically what I said on Friday. Nothing really changed other than a little bit of addition to the market structure. So ultimately on the total market cap, if I look at this to say the real 4-hour high was here, right? So the way I designed this content, by the way, I have a private community. You can join in the description. It is free to join in, join the fam. And also subscribe to the channel, turn the bell notifications on. If you don't watch these 5 to 10 minutes every day, you're gonna fall behind. You're not gonna understand how my brain works, and you're gonna leave stupid comments. To avoid that, either just don't watch or dedicate yourself for these 5 to 10 minutes every day. Join in the community, pin the Telegram, and take advantage of me being here since 2016, helping you understand where my mind is at, okay? So what I explained is that this is the 4-hour high. If you don't know, we're gonna put it up. You will see why. But ultimately, that is the 4-hour strong level. The market still did not break above and not even close above that level. So that is basically telling me that even though the 1-hour structure looks pretty good, and then we have a 50% retrace and an immediate MSS, market structure shift, this is primed for a push to take these relative equal highs and go up to the daily equilibrium, which is the 50% retrace on the daily chart. Markets usually retrace 50%, so basically the 50% retrace is going to happen at about 3.22 trillion. So the market will have to go up, I believe, go up here, touch onto any of these order blocks up here, by the way, like any of these. This is what I call premium zone. Anywhere here we can see a lower time frame rejection and then a continuation down. This is what I would expect to happen. But for that, the market is probably going to push. So if I go down onto the hourly chart, short time frame, I do think it is great for a long. I'm not going along, and the reason is because the risk reward is just not there, in my opinion. It's a one-to-one risk reward, not even that. It's not worth the risk. Even if this starts rallying and goes all the way up here to the daily OB at 3.4, it's just simply not worth for me to take the long here. If it can sustain above and whatnot, which I'm going to talk about in a second, I might. But ultimately, I do think that the market is going to push into the daily equilibrium, potentially up to the 3.35. I hope that we are not going to see a 4-hour close above the 3.17, because then we make a new high, and then it will be much more difficult for the market to continue lower, which is, again, can be good as well, but that would give a little bit of an invalidation for me on the short term and give much more strength to the upside we're going to take. So we're going to take it as it comes. So the second scenario is that this goes and closes above with the 4-hour candle close above 3.17 trillion. If that happens, I will start looking for long positions, taking my stop loss on the 4-hour structure low and targeting drawing liquidity at 3.66. I don't think this is going to happen. I think this is the less likely scenario, but it's definitely a possibility. TLDR, what I'm looking for is the following: a rejection. I'm looking for a rejection, potentially even from here. If it happens, I'm not going to short. The reason is because this double top is liquidity. So a lot of people who short it put their stop losses above the 4-hour high. They might even be right, but I would imagine, and this is the most likely scenario in my opinion, that the market is going to push, have a maybe even on FOMC. We'll see. Have a push into the 3.22 trillion region, and then reject from there. Hopefully, again, without a 4-hour close above the 3.17 trillion. If this plays out, I'm going to place my short positions, and I'm going to target these lows down here. So I'm targeting at least 2.7, but possibly 2.6, 2.5-ish region, somewhere here where the reversal should come, in my opinion. And there, if nothing else, then a massive, massive relief rally. So this is what I'm thinking. I'm going to update you if something happens. In the meantime, very important, I wanted to add this as well. So I don't have, as you see, I don't have any manual positions open. I'll let you know in the community. Right now I'm chilling, but I'm going to let you know I'm leaving all the messages, so join in there. But also on the bot side, I do have my bots running. So in case the market starts rallying from here, it doesn't reject whatever, I am in the market. A lot of you DM me and said, I have a full dedicated video. We're going to put it up here and on the end screen, and it's also in how I bought the dip on the description. You should watch that video, because I do believe, you know, I sold on October 17th, and I got out a majority of my positions, and I started putting back 10% of my capital into the bots. I'm probably going to put back more. Why? Because this works with volatility. The bot works with volatility. So every single time when there is volatility in the market, it's not just you just buy back on spot and whatever. It takes advantage of that volatility that we see on the chart, and we see a lot of volatility. So what I'm doing is exactly what I said. I deployed 10% of my capital that I sold in October into the bots. You can watch the video why and how, and you can also copy these settings. A lot of you DM me whether it's worth getting in now or wait. I can tell you one thing. The reason why I launched it at the time I launched it is because I didn't want the bottom to be going away from me. And you can see, except two bots, which is the Hype and the 𝗏𝗏, these bots are performing incredibly well. So would I deploy now? Yes. Would I deploy 10%? No. I'll probably take 5% of my capital, whatever that is, and just deploy it into the bots, because I do believe, again, it works with volatility. So it doesn't matter what is happening today, tomorrow, a week from now. These bots might all be in red, because the range on these are just so high that Bitcoin has to go to 50,000 for these bots to get liquidated, ETH to 16 or 12, 1300. I don't think that's happening from here. So it makes sense to deploy now as well if the market starts rallying, but also leave some capital behind, so you can just add back as we go lower, if we go lower, and I do think we will. Guys, truly appreciate your time. Thanks for tuning in. Join in the community. I hope I will see you there. Check out this video. This is going to explain why I bought the dip, how I bought the dip, and what exact coins I'm buying, how you can copy the settings. And yeah, subscribe to the channel, turn the bell notifications on, and I'll see you in the next one. Have a good week. Take care.